In this video, a Tesla bull who believes Tesla stock is headed towards $1,400 per share in the next 6 to 12 months, which is about 60% upside from where we are today at less than $900 per share, continues to bang the drum and warn Tesla stock investors that the stock is way too cheap and that were it not for the Twitter overhang, Tesla stock would already be at $1,100 per share. We're going to talk about the 10 key catalysts this Tesla bull sees driving Tesla stock higher in the coming months. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. So first of all, this unbelievably is Tesla stock as I record this at the end of July 2022. $891 per share, a market cap of $931 billion, a 12-month low price of $620 per share, and a 12-month high $1,243 per share. There are very few stocks, especially of companies with such a high market capitalization at the type of scale Tesla is already operating, with such uncertainty and differing opinions in terms of its true intrinsic value. Tesla stock's 52-week low is literally half the 52-week high. This is abnormal. This also speaks to the massive confusion and lack of consensus about what Tesla is worth and what their future looks like. The year-to-date chart for Tesla stock speaks volumes. A few months ago, in early April, Tesla stock closed close to $1,200 per share, then plummeted, and I mean plummeted, almost 50% in the following 2 months. If we go back a little bit further, the start of this year, Tesla closed at $1,200 per share before, you guessed it, plummeting again, about 40%. The question is, did Tesla stock collapse because of reasons that make sense or because of factors that have literally nothing to do with Tesla? If we look over the last 1 year, the story repeats itself. We've just looked at two recent peaks getting close to $1,200 per share. Guess what? Go back a little bit further, exact same fucking shit. In November 2021, Tesla stock closed at a peak of over $1,200 per share. Now, if you're a regular viewer of the channel, you'll understand what's happened in the intervening months. A bunch of different things, nothing to do with Tesla, macroeconomic environment, concerns about interest rates rising, people freaking out, inflation, war in Ukraine, Elon's Twitter deal, on and on and on and on. None of these things had anything to do with Tesla's execution or their future or their unassailable lead. Yet, Tesla stock has been pounded over and over and over. It's almost like Tesla stock's trying to break through $1,200, and every time it gets there, the universe conspires. Maybe the prayers from Tesla Q to the flying spaghetti monster are being answered. Tesla stock gets pounded. Then it comes back, then it gets pounded again, and back and back and back. Ultimately, despite a very volatile 1 year, Tesla stock is up just 25% in that period of time, although it has swung around more than an unrestrained kidney rattler. And that brings us to the present moment. As I have said 690 quintillion times in the last 6 or so months, Tesla stock today, to me, is the best risk-adjusted opportunity that I am personally aware of in the stock market. And it ain't just me. I'm sure many of you have already guessed. We are, of course, looking at Tesla bull Gary Black over on Twitter here. A few quick things, and then we'll look at the 10 catalysts. First of all, as I've mentioned in recent videos, these shots from the Bloomberg terminal speak volumes, as Gary points out. Meanwhile, Tesla 2023 revenue and EPS, earnings per share revisions, have gone straight up at the exact same time that Tesla stock has gone straight down. Now, if you're a regular viewer of the channel, you'll have seen me point this out multiple times over the last month or two. For those who don't know, the red line, earnings per share estimates, consensus estimates from the Wall Street analysts. I almost said something derogatory, but I didn't. The reason I almost said something derogatory is because these EPS estimates are ridiculously low. They are increasing, but they're still way too low. So, in short, expect this red line to continue moving vertically throughout the rest of the year, and in fact, probably the rest of the decade. Yet, at the same time, the white line, Tesla stock price, has gone in the opposite direction. But only recently. Over time, there is a fairly close correlation between the EPS estimates and Tesla stock price. Sometimes analysts chasing Tesla. It doesn't really matter. The point is, generally speaking, these two things, although volatile, do move in line overall. However, massive disconnect recently. As we can see toward the end of this chart, in 2022, suddenly out of nowhere, EPS estimates go vertical, Tesla stock price crashing. However, miraculously, very recently, we've started to see it rebound a little. After bottoming out, Tesla stock surging higher. Remember, Tesla stock was $620 per share just a few months ago, now close to $900. Still, in my opinion, a long way to go. The second shot here, revenue estimates. Again, same thing. Revenue estimates continue to soar higher, yet Tesla stock plummeting. In a word, disconnect. In 2 words, maybe 3 words, gigantic disconnect. Won't last in my opinion, nor in Gary's. In a moment, we're going to get to Gary's 10 catalysts to drive Tesla stock higher, but first, here's a tweet discussing these catalysts. Quote, "Rarely since I started posting this catalyst list has it been this robust. 6 potential catalysts in the next 3 months, plus Q3 volumes and earnings just around the corner. Investors not fully appreciating the potential of a new buyback program, but excess cash flow after growth projects has to go somewhere." And I've discussed this recently as well. Tesla's already at a point where they're printing more money than they know what to do with. They got to do something with this money. And keeping it all in cash when you already have a war chest of close to $20 billion and you're printing multiple billions of dollars every quarter into the future, to accumulate any more capital than this, honestly, will not only be idiotic, but it'll really piss me off as a Tesla stock investor. I get Tesla needs to keep cash for contingencies. They need to think, oh, what if this happens? What if that happens? Blah, 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 blah. I get all that. But once Tesla has enough cash to cover any unforeseen circumstances that they can potentially see on the future, or what if this happens, and then also some stuff that they don't even know might happen, just, unknown unknowns. At some point, Tesla gets to a point where they're like, okay, we really can't even conceive of any scenarios in this version of the simulation in which we'll need that much cash. What do we do with it? They either start share buybacks, pay a dividend, or maybe do something insane like build their own robotaxi fleet and or Tesla bot fleet and literally make and retain the assets themselves and just deploy them to serve customers. But even then, there'll still come a point where they just can't spend all the money. Now, I don't claim to be as intelligent or creative as anyone working for Tesla, so I'm not the one to decide, you know what, they got enough cash, they've thought about every possible scenario, they obviously know a lot more than I do, potential projects that haven't been announced and so on. But at some point, they got too much cash, they know there's too much cash coming in, they got to do something with it. And I personally think at these kind of prices, a share buyback would be the best thing Tesla could do with their money. Where else are they going to get a 10x return over the next decade? In the worst case, of course, these are all just my assumptions, could be wrong, but even if I am, even if it's only a 5x over the next 10 years, where else will Tesla get a better return? Another tweet from Gary. Tesla stock's 3-to-1 stock split should pass easily at the AGM next Thursday and will likely go into effect before the markets open on Monday, the 22nd of August. In 2020, Tesla stock rose 81% versus the Nasdaq 100, up 11% during the 3-week period from the 11th to the 31st of August. We expect Senate approval of the new EV credit before Senate recesses on the 5th of August. And this is what happened to Tesla stock following the announcement of the stock split versus the Nasdaq 100. Solid return. Black continues to beat the drum on Tesla stock. Tesla stock feels like a good setup into next week's AGI, 3-to-1 split and Senate EV credit vote. Another tweet. As I said, he's really banging the drum here. Tesla stock up 25% in 2 weeks on good 2Q earnings, better macro, and EV credit proposal. Can you imagine this stock once something really good happens, e.g. a 3-for-1 stock split, investment grade upgrade, new gigafactory announcements, Twitter overhang lifts, a new $10 billion stock buyback, etc. As we can see here visually, solid couple of weeks for Tesla stock. If only we could have seen this coming. Oh wait, I think we did. Well, at least some of us. As the saying goes, actions speak louder than words. And you guys have heard me, if you're a regular viewer of the channel, I've been saying the same shit over and over and over and over and over and over. Still buying with every spare cent, best risk-adjusted opportunity that I'm aware of in the stock market. But don't take my word for it. These are my transactions on Tesla stock since it bottomed out at $621.69 in late May 2021. Unfortunately for me, at the time, I didn't have a lot of money. Managed to pick up one share at $621. However, 3 weeks later, I managed to snag more shares around $642.69. It's so immature, by the way. 69 cents, 69 cents. That's no way to invest, but it's more fun. Anyway, I just want to show you guys that I've been buying Tesla stock every time I got cash. Buy more Tesla stock. Why? Because like Gary, I'm looking into the future and I'm thinking, dude, this is not going to last. In total, I've picked up 552 shares of Tesla stock in this period of time, and my average buy price is about $735 per share. And for the record, I don't typically have this much money to dump into Tesla stock over a short period of time, but as I've discussed recently on Patreon under my money printer videos, I have been able to conjure up multiple hundreds of thousands of dollars out of thin air in the last few months. I've explained this all in detail on Patreon. If you're not already a member and you want to see how, check the link in the pinned comment, join Patreon, browse through the recent videos, and you'll see plenty of them discussing how I'm printing this money out of thin air. Point is, I'm not just talking smack on the internet, oh yeah, but Tesla's to hurt. I'm actually doing what I'm saying. Every spare cent, all of it, and then some. And if we scroll across a little bit and look at the percentage gain and or loss on these transactions, 43%, 38%, 22%, 17%, 27%, 30, blah, blah, blah. You guys get the point, right? Sea of green. However, a couple of months ago, sea of red. I do just want to underscore, when I say I'm buying with every spare cent, I literally mean it. When I say best risk-adjusted opportunity that I'm aware of in the stock market, I literally mean it. I have not purchased or sold any stocks except Tesla all year. And I've been buying Tesla stock with every spare cent effectively for what now, 6+ years. I'm not doing this because I'm locked into the idea of investing in Tesla. I'm always asking myself, is there a better opportunity when I factor in risk reward? No? Well, then I guess I'm buying more Tesla stock. At some point this will change, but right now, this is my behavior. Another tweet from Gary here, long story short. Look for Tesla price targets to start increasing again. Current $881 average price target for Tesla stock on Wall Street. Keeping in mind Tesla stock is up 40% from its June bottom. This chart showing 12-month price targets for Tesla, consensus in orange, versus Tesla stock price in white. Underneath here, we also have analyst ratings, green buy, red sell, and a few holds in the middle. They say a picture is worth 1,000 words, and I think this chart is saying most Wall Street analysts are brain dead morons. Why? Let's think about this for a moment. Notice any trends? I'll just get to the point. See this increase, the green here, on the right-hand side of this chart? More and more analysts saying buy Tesla stock, buy Tesla stock, buy Tesla stock. Is it just me, or the higher Tesla stock goes, the more analysts suddenly start recommending investors buy Tesla stock? I mean, look at the green absolutely surging in line with Tesla's stock price. This doesn't make sense. Well, actually it does. We'll get to that point. Idiots. Chasing after Tesla stock instead of knowing what the fuck they're doing. You would think if consensus opinion on Wall Street was worth anything, most analysts would be recommending investors buy Tesla stock before it goes to the moon, rather than after it goes to the moon. Back to Gary's point about the 12-month price targets. Most of the analysts covering Tesla stock on Wall Street today have no idea what the fuck they're doing. They literally have no idea. They continue to get embarrassed. They have a price target of $500, then Tesla rockets up to $900, like, oh, that's awkward. What do we do? Next minute, they increase their price target, conjure up some magical explanation for why their price target's now chasing after Tesla stock, rather than just being honest and saying, yeah, we were wrong. We still don't know why Tesla stock's where it's at, but kind of embarrassing to have a price target down here when it's up here, so we're going to increase our price target. It's embarrassing, but it's true. Now, I know some will argue, well, hey, Stephen, you're actually looking at this the wrong way. The real reason that the analyst buy ratings have all suddenly come out of nowhere after Tesla stock's gone to the moon is because Tesla stock only went to the moon because suddenly they started producing financial results that nobody could have seen coming ahead of time. They surprised everyone to the upside, and that's why the price targets keep chasing after Tesla stock, and that's why the analysts are now recommending buy Tesla stock when it's 10, 15, 20 times higher than it was a few years earlier when they were all saying sell. That would be a reasonable explanation except for one slightly inconvenient detail. The whole Tesla stock going to the moon thing, Tesla's financials going to the moon, their profits going to the moon, the company printing money, having unassailable leads, scaling production fast. That was all evident, visible and predictable well ahead of time. Don't take my word for it. Go read some of Dave Lee's old posts floating around on the internet. Listen to what Rob was saying on the Tesla Daily podcast before it was on YouTube. Listen to what Gally was saying on Hyperchange. I could keep going on and on and on. There were people who were pointing out exactly what was going to happen years before it did. Not many Wall Street analysts. This chart really is ponderous. It's an indictment on how competent or not at all most analysts covering Tesla stock really are. Like I said, in my own case, I've been buying with every spare cent since the beginning of 2016. The most painful thing to look at on this entire chart is about smack bang in the middle. Just before Tesla stock goes on its epic run, we have the lowest number of Wall Street analysts recommending investors buy Tesla stock. Just before its epic run. Okay, long story short, in my opinion, most analysts covering Tesla stock, A, do not know what the fuck they're doing, B, shouldn't have been assigned to cover Tesla stock because most of them are automotive analysts. They look at Tesla and they think it's an automotive company, doesn't fit in the certain cell in their spreadsheet, they just ignore it. This is why they miss the opportunity. And most analysts on Wall Street still today and for years into the future will be chasing after Tesla stock at every turn, underestimating. Then suddenly out of nowhere, Tesla stock goes vertical for a couple of months, puts on 10, 20, 30, 40, 50, 100, 200, 300, 400, 500%, and then they think, I'm embarrassed by my price target now. I still don't know why it went up, but I guess I better increase my price target, something closer to where Tesla's at now, because otherwise I look like an absolute fucking moron. Joke's on them, because when you're increasing your price target chasing after Tesla stock, that's when you really look like a moron. It seems like most of the analysts on Wall Street think they're forecasting the weather, but they're actually just telling us what happened yesterday or last week or last quarter or last year. Hopefully one day they'll get ahead of it, but I won't be counting on it. Another tweet from Gary Black. Twitter overhang holds Tesla stock back. Absent the Twitter deal, Tesla stock would be $1,100 per share. This tweet posted on the 30th of July. And I tend to agree. And now, Gary Black's 10 catalysts to drive Tesla stock higher, in fact, to $1,400 per share over the next 6 to 12 months. Number 1, 3-for-1 stock split happening in August. Now, I don't know what's going to happen after this split is announced and or confirmed, blah, 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 but surely Tesla stockholders will vote in favor of the stock split, and the stock split will happen. And last time Tesla stock split kind of went to the moon. Of course, that doesn't mean it will happen again, but it does mean a couple of things for certain. One, there will be a lot of discussion about the Tesla stock split. In and of itself, just the fact that investors, the clowns on CNBC and so on are discussing a Tesla stock split may draw more attention to Tesla stock and may create a little bit more buying activity. Another consequence of a stock split, Tesla's stock options become cheaper. Now, I'm not going to go into all the boring details about how options work, but the cheaper options are, the more investors are able to buy options, the more investors will buy options, and more options activity can create more volatility both directions, depending on whether investors are betting on the stock going up or down. But in either case, a Tesla stock split, which seems inevitable, is likely to make the stock even more volatile. Number 2, S&P upgrades debt in August. Now, for those who don't know, oh my God. There are either incompetent and or corrupt organizations, credit rating agencies that deem companies creditworthy and or not. They rate their creditworthiness. You may be surprised to find that today, of all the world's automotive manufacturers, Tesla today still has a junk credit rating. And yeah, the name pretty much sums it up. You know who doesn't have junk credit ratings? The automotive companies who will all be going bankrupt later this decade, who are extreme credit risks, who will not be able to pay back money they borrow. According to the clowns behind I just can't even. These fucking idiots should all just be immediately fired and never allowed to work in the industry again. Okay, General Motors, Ford, pick your name. Better credit rating than Tesla. This is either corruption or incompetence or both, but it won't last. And as ridiculous as it sounds, if suddenly the S&P is rating Tesla as less of a credit risk, they've increased their credit rating, they're no longer junk, there'll be some funds, some investment managers who can suddenly tick a box. They don't have a junk credit rating. We can finally buy Tesla stock. Now we can buy Tesla stock. Let's buy Tesla stock. Seriously. So watch. This upgrade shouldn't make a fucking difference, especially given how absolutely absurd the current ratings are, but it will make a difference. Believe it or not, there are a lot of box tickers on Wall Street. Well, we can't invest in that. Credit rating's not high enough. Just ignore everything. The corrupt, incompetent agency that rates credit says they're not good, therefore we can't invest. Number 3, the EV tax credit in September. As we've heard, it's back on the table now. $7,500 EV tax credit. Waste of resources, waste of money. Doesn't need to happen. The market's already decided EVs are the future. They're close to cost parity. Costs are already coming down. It's just such a waste of money. But hey, as a Tesla stock investor, I'll take it. And as I've said in recent videos, this will almost certainly force Tesla to raise their prices almost exactly in proportion to the tax credit itself, meaning Tesla's margins through the fucking roof. Like I said, total waste of resources. It's completely unnecessary, but I'm not complaining. However, if I was a US taxpayer, I certainly would be. Number 4, Tesla's AI Day, number 2 in September. Now, truth be told, I actually think this is more likely to send the stock tumbling. After all, every time Tesla unveils plans to totally dominate, make tens, if not hundreds of billions, maybe trillions of dollars of future profits, Wall Street analysts don't understand what they've seen. Finance media doesn't understand what they've seen. Investors don't understand what they've seen, and therefore they decide the event was a disappointment and they start dumping the stock. Happens just about every time Tesla does any event of any meaning ever. Seriously, do your homework. Look at Autonomy Day, battery invest, on and on and on and on. It's hilarious. Farcical, but again, may present a buying opportunity. So while I agree with Gary Black that in theory, AI Day 2 should be a positive catalyst for Tesla, that would require the people who are seeing AI Day 2 and then making investment decisions based on what they've seen, actually understanding A, what they've seen, and B, the implications. Both extremely unlikely. Number 5, the Twitter deal overhang lifts in October. Lawsuit, this will all be done and dusted by then. One way or another, we'll know what's happening, and yes, believe it or not, shouldn't have an impact, but a lot of investors do not like uncertainty. Therefore, while there's some overhang, investors are not sure, will Elon need to sell more Tesla stock to complete the deal? What's going on here? Uncertainty equal Tesla stock getting pounded. As we saw in an earlier tweet, Gary Black believes that were there no Twitter deal overhang today, Tesla stock would be over $1,100 per share. Number 6, Tesla stock buyback in October. Now, of course, this is just theoretical. I hope it happens. I'd like to see it happen. I don't think it will happen. Time will tell, but this is potentially a huge wild card. If Tesla does announce a share buyback, I'll be over the fucking moon. It's a very strong signal to the market. Even some of the dullards on Wall Street go, oh, what, they're buying back stock? Oh, that's good, right? Huh. Of course, Tesla Q is going to say, well, Tesla's going bankrupt. They obviously don't know what to do with their money. Therefore, they're toast, they're cactus. The company's going out of business. Overall, I think this will be a very positive catalyst. Number 7, new gigafactories potentially announced in the UK and Eastern United States. Now, believe it or not, I'm actually on board with this. I do believe that there will be a UK gigafactory announced. I also believe an Eastern United States gigafactory will be announced. And I also believe another China and or somewhere in Asia, probably China, gigafactory also to be announced. That is in addition to the massive expansion at Shanghai. Tesla remains fairly coy about future gigafactory sites, but it won't be long before they are announced. This is of course going to send many of the Wall Street stock analysts into an absolute spin.
Wait, what? If they make more factories, they're going to make more cars than we thought. Oh no, we have to update our model. Wait. It hurts. I didn't think they could grow that fast. I don't understand. What do we do?
Oh no, we'll raise our price target. Number 8, FSD beta release in Q4. In other words, wide release to the entire fleet in the United States. This will be a huge milestone for Tesla, but honestly, I don't think the stock market's really going to understand the implications, at least not initially. So I won't be surprised if on the day that FSD beta goes wide release in the United States, Tesla stock goes absolutely nowhere. I won't be surprised if over the next week it goes absolutely nowhere. I won't be surprised if over the next month it goes absolutely nowhere. But at some point, hopefully, the stock market will figure out the implications, which are profound. We're talking about Tesla demonstrating their unassailable lead, making phenomenal progress in a winner-takes-most multi-trillion-dollar market. Number 9, Cybertruck launch in 2023. At this point, Tesla aiming for first Cybertruck deliveries give or take around mid-next year. However, could be a little bit later than that, could be a lot later than that. In either case, we know Cybertruck's around the corner. When an official launch date is announced, this will be huge. More importantly, however, when the first deliveries take place, this will be enormous. So, and in the following weeks and months after the first Cybertruck start hitting roads in the United States. I know you're all nerds, you're on the internet, you've already heard about the Cybertruck, you know what it looks like, we've seen the jokes and the memes. But there's a lot of people out there, in fact, most people, most general consumers out there, have no idea what the fuck the Cybertruck even is, let alone what it looks like. Imagine when these things start hitting roads and people see them driving and go, what the fuck is that? Eventually they find out what it is. And then eventually they see one, they use one, a friend gets one, they see it on a work site, they see what it's capable of. And then we start seeing the sales and production numbers coming in. And investors lose their fucking minds. And the 10th catalyst, a $30,000 robo-taxi in 2024. This, of course, is the inflation-adjusted $25,000 Tesla vehicle, which Tesla has postponed because they don't need to make it yet. It is likely this will be designed to be Tesla's main robo-taxi vehicle. Whether or not they sell them to consumers or just build out their own fleet, yet to be determined. I think it might be a combination. Initially, consumer-facing, maybe they start building out their own fleet. I don't know for sure. But when Tesla confirms that a more affordable vehicle will be entering production in this kind of a price range, and its intended use is predominantly as a robo-taxi, investors who can use a calculator and actually believe what Tesla is saying, understand the progress of their autonomous software, again, going back to the winner-takes-most multi-trillion-dollar market, this will be huge. And Gary Black finishing there with a $1,400 price target in the next 6 to 12 months. Now, just for the record, a quick sanity check. My 2022 base case price target for Tesla stock, available exclusively on Patreon. Check the card in the corner or the link in the pinned comment. $1,335 per share as I record this. We've got about 6 months left in the year. That'll put me close to where Gary Black is. This is a coincidence. I don't base my price target on what Gary Black's saying. As most of you will know, I have a valuation model also available exclusively on Patreon to supporters at the investor level and above. That is what produces my price targets. And to be clear, my price targets aren't a prediction for what Tesla stock will be worth. Instead, they are what I believe Tesla stock should be worth based on the numbers, the assumptions in the valuation model. As we've seen, Tesla stock's rarely reflecting its true intrinsic value. Hence, best risk-adjusted opportunity in the stock market. I get the feeling this video will age relatively well. I know that's an arrogant thing to say, especially when predicting something as unpredictable and unreliable as the stock market actually relatively accurately pricing Tesla what it's worth, but I am still on the record. I continue to bang the drum, as does Gary Black. Tesla stock under $900 per share, less than a $1 trillion market cap, heading into the second half of 2022, massive head scratcher. Hope you guys and girls enjoyed the video. Let me know in the comments below. Where do you see Tesla stock heading over the next 12 months? Any catalyst that Gary Black forgot to mention? And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment. Doing so will give you access to well over 100 exclusive Q&A videos, dozens of other exclusive videos, including those on my money printers explaining how I'm coming up with hundreds of thousands of dollars to dump into Tesla stock at these levels, despite still having a fairly significant tax bill. And of course, you'll also gain instant up-to-date access to my Tesla stock price targets out over the next 10 years, which includes the bear case, the base case, the bull case, and the hyper bull case. So, see you over on Patreon. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.